Recording now.
Okay, welcome to my class. I'm a little nervous, but I'm going to try to say it in the best way possible for you guys to easily understand. If you have any questions, please let me know because I don't really know what you guys want to learn. Brokerage, the number one brokerage I would recommend is Fidelity. Fidelity is good because you could buy fractional shares. So if you want to buy one Tesla share, you could put $100 in there and still own Tesla without buying the full stock. Basically, it's what Robinhood would do, but Robinhood sucks. I think the biggest thing to understand is fundamentals of a stock, which stocks you really believe will have high growth in the future. That's the best way you could profit off of it. And if you combine it with technical analysis, you can make the most profit in the most timely manner. So fundamentals is, which stocks you really believe will have a better growth in the future. That's basically it. You have to do your research on their income, revenue, and projected growth. But what you think and what you believe is different from what everyone else in the market could also be thinking too. So that would reflect stock price. Now, what I'm teaching you mainly is the technical side. So I'm going to share my screen. Oh, you have to enable share screening post.
I'll try right now.
Wait, Joe, do you use Fidelity as well?
Yeah, I use Fidelity. Fidelity is, I think, the best broker.
Sounds good.
Because Fidelity is free.
I have TD and I have Schwab.
Yeah, TD Ameritrade, Charles Schwab, they're all really good.
They're all like
you can do it now.
Yeah, but I do like Fidelity because you could buy fractional shares, which is pretty.
I did not know that because, well, I don't have Fidelity.
Yeah, I like Fidelity. But honestly, it depends on whatever one you want. They're all the same.
Yeah.
Except for Robinhood. Robinhood sucks.
Oh, yeah.
Rally.
Okay, so this is technical analysis. The best way to look at these charts is TradingView. There's a free account that you can use to make this. The paid one is just, you remove some ads, but the free account is just as good.
So do you use free accounts?
I use a paid one because it's like $200 for the year.
Okay.
And it gives you a little bit more features. But if you're kind of like casual, the free one works just as fine. So this is technical analysis 101. We'll start with our favorite stock, Tesla.
Yay!
This is Tesla on the daily charts. Right. You can see how, hold on, let me get rid of some stuff. So if you have a naked account, a naked chart, this is exactly what it would look like.
Mm-hmm.
Basically a bunch of lines and candles and going up and down. But this is basically reflecting a stock's movement throughout the day. Each candle is a day's movement.
Mm-hmm.
And this could go back to, as much as you want, 2019, 2018, 2017. This is very powerful because it tells you what the market is seeing and dissecting and, understanding and what they believe the stock's price or the value is at the time. So what's simple for what people can do is just I'm going to keep it as simple as possible. The main thing to understand is to understand the trend. Is the trend up or is the trend down? Tesla has a very strong trend of going up. So this is a sign of bullishness, meaning people believe that the stock price is going to keep going up. If you think that the stock price is going to go down, let's say Macy's, for example, or Sears. Wait, what's that one company that was going bankrupt? Sears?
JC Penney? Isn't JC Penney or
Oh, well, wasn't it Sears, the one that's liquidating all their stuff?
I have no clues.
How come I can't even see them on the stock market?
Maybe they're done.
Their thing is
Macy's?
SHLDQ.
Oh, okay, here. We'll look at Macy's.
Okay.
So Macy's is in a clear downtrend from up here to down here, which is the opposite of Tesla, which you could see from all the way back into 2015. It's had a downtrend all the way up to here. But you could see from Macy's from back here, 2008 to 2015, this is an uptrend. So this is where the stock price will go up. Just because the candles go up and down right here does not mean it's a downtrend on these small up and downs. You have to look at the overall structure. So I think that's the biggest thing to identify if the stock is up or down. I mean, if the trend is up or down. If it's up, then you want to go long. If it's down, you either don't want to buy it or you want to short it. Okay, we'll use Macy's, for example. So if you're on TradingView and using technical analysis, the great thing is to just draw one line right here, which is the major support. You want to draw a line that connects as many points as possible, but it doesn't have to be all of them. So you can see based on this chart right here, I drew one trend line that goes from 2008 to 2015. This is the major support trend line, meaning that as the stock continues to go up, and you can see as it bounces on this white line, the stock price continues to climb higher. This line, this trend line is your major value. It's your basically the support line where you could find major value in the stock. Meaning if it hits this trend line, you could expect it to continue to go up rather than buying the stock up here or away from the trend line. As you can see, the price continues to kind of come down. So identifying this while using technical analysis, the biggest thing is to find the area of value where you think it hits a certain point and you could expect the price to reverse in the other way. Investing your money in the stock market is all about efficiency with your time and your money. You don't want to buy in a stock when it's overvalued and then expect the price to go down on you, in a couple of days or a month later. So we'll go back to our favorite stock, Tesla. As you can see, I drew some major trend lines from earlier this year, and you can see how even though I drew these trend lines months ago, the stock price still respects my support line. It bounces perfectly on these lines that I drew months ago. It's not like I did this recently, it bounced and bounced and bounced and bounced. And then as the price grows in value, it continues to my upper trend lines. So it's a very powerful thing that a lot of people in investing and in Wall Street, they use. Like, I'm not a fortune teller. It's surprising that these lines were acting as support all the way up until November, and then it continued to the next lines. So that's why I think it's good to find the area of value. People will say it as support and resistance. It's different in how you use it. I like to use trend lines, but if you look at this without the trend line, so trend line is a trend line. Trend line goes vertical. I mean, not vertical, but sideways. And then there's people that use support and resistance lines, meaning this is an area of support. And this is an area of resistance. Maybe right here. So we'll look at this. So now you see that the lines are different based on how it was before. Now these are horizontal lines. So you can see that this is acting as resistance. And this line is acting as support. So the price goes up and down, basically similar to my other lines, but now it bounces above. So this white line right here that I'm lining up, this is acting here. This yellow one is acting as resistance in this little area. And then this white line is acting as support. Soon as the stock price breaks this area of resistance, which is a very strong point, now this yellow line becomes an area of support. So the price goes up higher, makes a new high up here, and then now it comes down to test the support, right? Basically, that's identifying your support and resistance. I don't think, you could do your more research on it. That's basically what it is, support and resistance, or supply and demand zones. But to keep this simple for everyone else that's watching, I found one particular way that you can make money and just follow this guideline to keep it very simple. So this is Tesla. We like to use our favorite indicator called RSI, which is Relative Strength Index, which shows this purple box at the bottom. This purple box at the bottom shows if a price is overbought or oversold. So you can see as Tesla continues to climb higher and higher and make new highs, the purple box goes towards the top of this RSI. Oh, wait. Let me explain the RSI. So the RSI right here has basically 3 areas of value. You have your value from 70 to 100 down here, which means the stock price is overbought, meaning it's very expensive and people will most likely take profits over there. Then you have your area of value in the middle from 30 to 70, which is basically just kind of in the middle. The higher it is, the more overbought it is. The lower it is, the more oversold it is. And when it goes from under 30 to 0, means the stock price is extremely oversold. So if we're looking at our favorite stock, Tesla, and we're looking back in March of 2020, which is where COVID happened, the COVID crash, you can see the stock price completely selling off and hitting towards the bottom of the RSI. The RSI comes down to